a lot of people that were doing bridge loan deals that shouldn't have.
Mm.
And so now with the price increases, okay, they're not competitive. And it's like, oh, bridge loans are bad. No, that deal should have never been in a bridge loan in the first place.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Malcolm Turner has over 25 years in the financial services industry. He specializes, though, exclusively in commercial lending. In 2007, he co-founded Castle Commercial Capital LLC. They are a national commercial mortgage banker and brokerage based in Southfield, Michigan. Malcolm, welcome to the show.
Thanks, Sam. Thanks for having me on. I'm honored to be here.
Absolutely, Malcolm. The pleasure is mine. There are 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start? Where are you now? And how did you get there?
I started in, well, how far you want to go back? I started in financial services as a financial advisor. And then the laws changed with Glass-Steagall, where everyone got in everyone's backyard, insurance guys selling brokerage and brokers selling insurance, Got into residential lending. That was a tremendously lucrative at the time. You couldn't do deals fast enough. There wasn't enough appraisers to do them at that time. This is 05, 06. And was having a conversation with my pastor in his office one day about me doing the right thing for a client, which meant putting him in a fixed rate FHA loan. And my manager wanted me to put him in an option arm that would have blown up 3 years later had we, had a crystal ball. And I was like, yeah, but this guy is a single guy, first deal. We should do the right thing, right? Oh, there you go, Malcolm, talking about that do the right thing stuff, And I said to my pastor, why is doing the right thing a badge of dishonor? And he says, well, if you were going to do a company, mortgage brokerage, how would you do it? I'm like, well, I do commercial, because commercial is about the numbers. It's not about the kitchens and the bathrooms. It's the math, And we talked about it. I said, yeah, you set up an office and you have to build relationships with some lenders and do this, that, and the other. And that's about all it would take. He goes, great, let's do it. I was like, oh, I thought we were talking hypothetical. He's like, no, I love you like a brother and I trust you with money. We should do it. And I was like, okay. I was like, well, I love you too, man. And I trust you, but you don't know anything about mortgages. So we would, I've been doing all the work and we're splitting the money and I don't want to mess up our relationship. And he's like, yeah, you're right, Malcolm. I totally get that. Tell you what, you're going to have to train me. I get it. I'll be humble. Let you coach me. Let's build a legacy for our families and I'll fund it and you set it up and then we'll be evenly yoked. I was like, okay. And that's how Castle Commercial Capital was born 16 years ago.
Wow, that's an unconventional story. I love that. Getting into lending in 2007 doesn't seem like the most favorable time to start a
No,
company like that.
it was not. Our saving grace was the residential market crashed first. Commercial really didn't get pounded until 2010. That's about when it finally caught up to commercial, But since then, we've survived the great financial crisis. We survived COVID. We've even survived just the latest rate increase of the last year, because there's been quite a bit of turmoil, especially on my side of the table. Lenders have gotten bought out, lenders have gone out of business. When lending stopped during COVID in March of 2020, by the time June and July rolled around, some of those lenders didn't make it, and we're still here. So I'm glad to do that. But I mean, that's not because I'm special or anything like that. But I've always recognized, like when COVID hit, I said, okay, no one's funding right now. Not sure when they're going to kick up. So let's redo our website. It's a great time to do it. Let's redo our marketing. Matter of fact, let's come out with a commercial mobile lending app. Let's do that. And so I've always tried to stay out front and say, okay, like Wayne Gretzky said, he's great because he skates to where the puck is going, not to where the puck is, and that's up the side. And then we just wrote our book, Financing the Unbankable Deal, And so I was at the National Commercial Mortgage Brokers Conference in Vegas last year, and I was talking to a bunch of commercial lenders and saying, hey, I'm writing this book. Where do you guys think the market is going and what's it doing? And, did I cover everything? Is there anything I missed? And one of the guys was somewhat skeptical, and we had a breakout session the next day. And during the breakout session, he found out everyone on the panel had done business with me but him. He was like, wait a minute, you did business with him, and you did a loan with him? And both of the guys going, yeah, he sure did. Yes, he does. They're like, well, okay, well, you got to get us in there.
Right.
And I was like, yeah, okay.
That's awesome. That's awesome. Well, tell me this, what is the type of lending that you specialize in now?
Right now, most of our business is multifamily. Most of our business is multifamily. And we kind of slid into the bridge lending space because, the market for deals that are picked over and everyone's fighting for, if the market is this big, those deals are this big.
Right.
And so there's another, this is a stat a lot of people don't know, but like 85% of commercial loan applications are denied.
Yeah, I believe that.
Are denied, right? That doesn't mean that the 15% are great and the other 85% are terrible. There's probably another 25% of those deals that are doable. They just don't know how to do them when their bank says no.
Right.
Right. And so I was at a commercial multifamily meetup, and a banker was doing the presentation on financing. And at the end of it, they said, someone asked the question, well, outside of you, they were a small community bank. Outside of you guys doing loans, who else can do them? What's another way to do a multifamily? He says, well, the small banks and big banks. And I was like, that's it? And they were like, yeah, just those two. And that was from their perspective.
Right.
Right. And I was like, okay. So I posted in the group on their Facebook page, there's 7 alternative ways of financing deals between Fannie Mae, Freddie Mac, USDA, FHA, HUD, right? Private lending, bridge lending. There's a whole smorgasbord of options, and everyone's getting in the business. You have insurance companies, pension funds, hedge funds that are setting up mortgage funds. So there's plenty of capital in the marketplace. Now, deals, on the other hand, is another story, but there's plenty of capital to get deals done.
Right.
It's just a matter of what it's going to cost you. And then if you're buying, can I price my deal where the cost of capital makes sense?
Right. That's the kicker right there. Can I price my deal where the cost of capital makes sense? And there's a lot of fear, I think, in the marketplace right now. What are we on? Mm-hmm. You would know this stat better than me, but I read it maybe a month ago that year-to-date transaction volume in the multifamily space was down 75% nationally.
Mm-hmm.
The rising interest rates are a concern, as you said. You guys have weathered through that, but having specializing in the bridge lending space, there's a lot of people that look at bridge lending now, especially with a suspiciously. They look at it and go, ooh,
absolutely.
Bridge lending. I gotta go. Like, that's not for me. Tell me why it still is a good option for the deals you guys are getting done.
Well, I think you start with, when is it inappropriate? Right? If you have a cherry deal, it's cash flowing like crazy, you got tremendous occupancy, your expense ratio is fantastic, the property condition is great, the location is great, you don't need a bridge loan. Right. And what I've seen is, for convenience and speed, and just, again, convenience, because it's not as many hoops to jump through, a lot of people that were doing bridge loan deals that shouldn't have. And so now with the price increases, okay, they're not competitive. And it's like, oh, bridge loans are bad. No, that deal should have never been in a bridge loan in the first place.
Right.
So for me, I look at, if the deal has something wrong, if it's got what we call hair on the deal, poor occupancy, poor cash flow, or time. there's a situation where there's a time sensitive thing going on. Like for example, I had a deal we closed where there was two partners, two guys partnering on a deal. They owned the property probably about 5-6 years. One of them was getting divorced. And sometimes you see it coming, Sam, right? You sort of know the handwriting's on the wall, right? And the one partner says, look, if you're getting divorced, we got to get out of this partnership because I don't want your wife winning your half of the deal. And I can't be partners with her.
Right.
You couldn't make it work. I sure as hell can't. Right. So they were looking to get out fast. Their property manager was my client. So I do commercial real estate meetup here locally in Southfield, Michigan. And this guy's been coming to my meetups a couple of years, and he had about 10 rental properties. And so we did a portfolio loan, cashed a bunch of equity out of his residential. And then literally 45 days later, these guys said, hey, Rob, do you know anybody that might want to buy this property? Because we got to get out fast. And he was like, hey, me. Right. He's already been the property manager and he had the cash and he knows what the issues were with the property. Right. And there were certain things they should have done, but they weren't doing that could have made it more profitable. And so he knew where it could go. So we financed that deal, got those guys out, and we closed in like 30 days.
Wow.
And for the speed for closing that quickly and beating the attorney right to the courthouse, he got that property at like a 18% discount to value.
Right.
Right. So for some sellers, speed and time, let's just say time, is more important than money.
Right.
Right. And so you have to say and play a blue ocean strategy and say, okay, where am I looking at deals that no one else is looking at? And then how do I make that work? And then that's where a bridge loan can come in. And even if the deal is fine and there's no pressing issues like these two partners had, you might still offer that lower price, but I will close quickly. I will close in 3 weeks. I will close in 30 days or less, and see if they bite. Now, if they don't bite and you says, okay, fine. You didn't bite, I guess I'm going to have to go the traditional route, because there's going to be a higher cost with the bridge loan.
Sure.
Right. But if I'm getting an 18% discount off of value, I don't care.
Right.
The math works.
Right. Well, hopefully the math works, because even if it's a discount, if the current cash flows don't cover the the current expenses, then it becomes an interesting equation.
Well, right. And that's where the math has the math.
Right.
Right. And I say that in my book, the math has to work.
Right.
Right. And you can't fall in. And one of the mistakes sometimes investors will make is they'll find a deal, or maybe it's a deal they've been pining on for a long time. It finally comes available. They get a shot at it, and it's a bad deal. And I'm telling them it's a bad deal. They got other advisors telling them it's a bad deal, and somehow they're still trying to make it work. I remember I had a guy shop a deal to me 3 times in 2 years. And the first time I was like, yeah, I don't think this is going to work. He didn't listen. He went to someone else. Didn't work. Paid some guys money up front to quote unquote pre-approve them or some nonsense. Okay. And came back to me. And then the third time, a commercial real estate brokerage here in town said, hey, Malcolm, I got a client coming in tomorrow. He's got this big deal downtown Detroit. We're trying to make it work. I know it's short notice, but can you meet me in my office at 10 o'clock? Because he doesn't have his financing set. And I was like, sure. I walked up into the meeting, and the guy's name, the broker's name was Levi, right? And I was like, hey, Levi, how you doing? He's like, good. He's like, Malcolm. I was like, Mike. And Mike was like, hey, Malcolm, how you doing? I'm like, good. And he was like, oh, you know each other? I was like, oh, yeah. Right? And we went to talk about the deal, and he was like, yeah, I got the spreadsheets. I'm like, it's okay, Mike. I got everything on your deal. I don't throw that stuff away. So everything you submitted to me, is all those financials still the same? Yeah. Okay. Well, your options, the options I gave you 6 months ago, the options I gave you a year, 2 years ago,
same option.
Probably the ones you still should take. And he wasn't willing to listen. He was so in love with this deal He just couldn't let it go.
Mm. And it was a deal that should have just been let go, is what it sounds like. It was just a bad deal.
It wasn't I won't say it was a bad deal per se. It wasn't a great deal for him.
Right.
And he ended up losing it. Someone else got it. And, long story short, it was a deal that was probably like $1.5 million. And I just saw it sold for like 5.2.
Oh, wow.
So, but if I, they always say, there's more than one way to skin a cat. Sometimes there's only one. There really is only one. And if I say this is how you make it work and this is how you get it done, and the guy doesn't want to do it, there's nothing I can do.
Right.
I can only advise.
You can only advise. Let's talk a little bit about your Financing the Unbankable Deal book. And again, this kind of goes obviously hand in hand with bridge loans, things like that help get some of these deals across the finish line. But what are unbankable deals, and what's compelling about those that makes people even want to buy them? I mean, if banks are looking at it going, way too much risk, kind of like you looking at it going, hey, that's a challenging deal. Like, what's the motivation behind someone trying to get deals like that done? And what's the, I mean, just give me some color behind that if you can.
Sure. I mean, from my perspective, a good unbankable deal has got some hair on it that scares the willies out of everybody else. So one, you're not going to have a lot of competition when it comes to negotiating the deal, because most people don't think it's possible.
Right.
Two, like I said, it may have cash flow issues or occupancy issues, and the question becomes, does your team, because I believe teamwork makes the dream work, right? Does your commercial real estate team have a plan to turn that property around? Sometimes that property, that unbankable deal, is a hotel that's failing miserably. There's a lot of hotels right now, Sam, that are in trouble. The biggest category of deals in foreclosure and forbearance are hotel deals. Okay.
It's not office space.
No, it's hotels. It's
What
hotels.
is there?
Why? Because if I'm Ford, okay, and I'm leasing 50,000 square feet and I've got a 5-year lease, right? I'm paying my bills.
Right.
Ford may try to negotiate with the landlord, but I'm paying my bills.
Yeah.
Okay. In a hotel, though, right, it's consumer based. So, right. So if the consumers are like, yeah, that area is not that hot anymore, or we don't like that property anymore, or it's not managed well, it can drop like a hat. And so as an investor, though, sometimes we know in commercial, it's about highest and best use, right? So one of my examples in my book is about strategic repositioning. I had a client, she bought one of these drive-in, like motel type places, you know what I'm talking about? Where you know, movies, you pull up to it. That's where everybody hides out when they're trying to hide from the FBI. They're on a lam.
Yeah.
One of those type of hotels. And she closed off the place. She put wrought iron fencing all around it. She made it senior only, because seniors only need about that much square footage.
Right.
She took the wall out and the back of the unit in between. So she made 2 units. One unit is like their living area, and the other unit is a bedroom.
Sure.
Bedroom, private bath, right? The other one was like a little living area with a kitchenette. Okay. She provided housekeeping for them. She provided meals for them, 3 squares a day, all for all-inclusive price of like $2,500 a month.
Wow.
Okay. The square footage was only 432 square feet. That thing was cash flowing like crazy, right?
I'm sure it was.
And so she's like, let me do it again. And so that's where, now, if she goes to get a loan for multifamily, that's not going to work. They're going to look, this is a hotel.
Right.
You're going to have to do some renovations to it. We don't know about your experience doing that. How successful is it? You're going to change the use. What about But if somebody has a plan and they got it worked out, and she had a chef that would come in the clubhouse of the place. He would cook meals for all the residents on a daily basis. It worked out. It cost her like $5 a meal.
Wow.
Right. The maid service, same thing. And the great thing about the maid service, they're all seniors, right? They're on fixed income. They loved the fact that meals, housekeeping, everything was included. For her, she knew her property was going to get kept up because the maids go in there cleaning everybody's stuff.
Right.
And if somebody was having a rough time, if they were sick or they weren't doing well, the maid would know first.
Sure.
And say, hey, Mrs. Johnson and, unit 3B is struggling. You may want to call her adult children, have them come check on her, So it was a way to better manage the property as a property manager, because the maid was giving her all the gossip on what was going on with the place, and every unit was maintained well, and she made a really good profit. Oh, and she gave them cable, right? Because she gave them like basic cable. And the only thing those tenants had to pay for was their own cell phone.
Wow. Wow.
And that was not a bankable deal, but that was where, and I believe she bought that property all in between the renovations and the purchase was like $1.1 million. And I think the value of her cash flow was something like 2.4.
Wow.
And then when I met her, she wanted to do the cash out refi and then go buy her another one.
Sure.
And I was like, absolutely.
Absolutely. Yeah, because you got the model. I mean, that's it. And I think that's what I'm hearing you say here is anything that is outside of the ordinary, it's not maybe cash flow positive, and or if it is cash flow positive, the value add plan has not yet been implemented. A heavy value add plan has not yet been implemented. So what you need are a couple things. Tell me if I'm wrong, but you need someone with a skill set to implement the heavy value add plan.
Yes.
And then, obviously, that's really it. And the second part is to have that plan. So if you have those two things inside of a deal, maybe that non-traditional or the traditional lenders won't look at, you need to go to the non-traditional route, which is through maybe somebody like yourself that helps specialize in that.
Mm-hmm.
Okay.
And there's money for, there's money for all of that. And there's lenders who aren't scared of a value add project.
Right.
They're not scared of, even if it's like a straight, obviously reposition, but also just this is a property that maybe market rents are $1,200 a month, and the current rents are like $700, $800. The owner is like 82 years old, and he just didn't feel like putting everyone on a new lease. Right. So the whole rent roll is month to month, and it's under market, and the bank is like, yeah, we don't want to do that. But if you've got a guy that's got, let's say, 4 or 5 properties already in the area, he's bringing in applications, right? Rental applications from those other properties. Okay. He knows I can fill up those 20 units easy.
No time.
I know guys, they do self-storage like that. They'll have a great location, and they'll have one property that's the real big marketing property. It's on such a great corner. That property is always full. Mm-hmm. And they use those extra locations to fill other self-storage. They got like 5, 6 other self-storage units that are not on great locations. So therefore they were cheaper.
Right.
Right. And they use the one premier property, right, the trophy property, to feed the applications and keep the occupancy high in the other self-storage properties that they have.
That's awesome. I love it. I love it. Malcolm, I've learned a lot from you here today. Learned about bridge lending. You learned about the times when it's a good application, a good opportunity to use that. Talking about your book, Financing the Unbankable Deal. We've talked a lot about the advantages of using bridge lending, convenience, speed. Just went kind of through a lot of those details on that. I've learned a lot from you. Certainly appreciate you taking your time to come on the show today. If our listeners want to get in touch with you and learn more about you, what is the best way to do that?
They can find us on YouTube. We have a YouTube channel, Castle Commercial Capital. So you can find us on YouTube. Our website is castlecommercialcapital.com. I also have my book website, which is Financing the Unbankable Deal. They can learn more about the value that's in our book. And if they want to book a consultation, I offer this to all of your listeners. They can have a free consultation for half an hour with me to discuss the deals that they're working on and future deals. Because one of the best ways to be really effective with your financing, and I put this in my book, is to meet with your finance guy ahead of the deal and say, hey, here's where financing's at, here's where it's going, here's the best deals to get done. And then go out in the marketplace and see and it's amazing. Sometimes I'll have a conversation with someone and literally 3 days later, I'm like, I found just the deal you were talking about. Really? Yeah. But it's like, and I'll end with this, Sam, it's like getting a car. I got a black Toyota Venza XLE, not a whole lot of them on the road. Most people don't even know what that car is. I didn't know what it was. I fell in love with it when I saw it, right? Now I see them all the time, every day. Right. It's like once you get an eye for certain types of deals, you see them. I've got an eye for commercial real estate. I personally like to buy single tenant net lease properties that are vacant. So every time I'm driving down the street and I see an empty McDonald's or a former Baskin Robbins or a closed Starbucks, I'm like, ha ha ha. And I'm reading what's the other tenants around there. And most people just drive by those places.
Right. I love it. I love it. Malcolm, thank you for taking the time to come on the show today. We'll make sure we include the links to your book and to your website there as well, there in the show notes. I certainly appreciate your insight and your time.
Hey, thanks for having me on, Sam. I appreciate it. It was fun.
Hey, thanks for listening to the How to Scale Commercial Real Estate podcast. If you can do me a favor and subscribe and leave us a review on Apple Podcasts, Spotify, Google Podcasts, whatever platform it is you use to listen, if you can do that for us, that would be a fantastic help to the show. It helps us both attract new listeners as well as rank higher on those directories. So appreciate you listening. Thanks so much and hope to catch you on the next episode.